It wasn't a huge headliner, but this past Monday, the Chief Financial Officer, Zachary Kirkhorn, decided and announced that he's stepping down from the company. He served as the CFO for the past 4 years and has been with the company for 13 years. During his tenure at Tesla, they saw massive expansion and growth. Let's talk about some of that growth. During his tenure, Tesla's valuation grew from 50 billion to almost 800 billion. During Kirkhorn's tenure, Tesla posted his first quarterly profit after ramping up production of the Model 3 and hit a market valuation of more than $1 trillion. Before we get into the analysis, let's look at this video from Yahoo Finance that talks about Kirkhorn's departure and the impact on Tesla moving forward.
Tesla shares down today after the EV maker revealed in a filing that Chief Financial Officer Zachary Kirkhorn has stepped down from the company as of August 4th. Kirkhorn served as CFO for the past 4 years and has been with the company for 13 years. For more on what this means for Tesla moving forward, we want to welcome in Colin Rush, Oppenheimer senior analyst. Colin, thank you for being here today. At first blush, sometimes when you learn about a CFO suddenly departing, that could be bad news. Not seeing it really take a hit on Tesla stock today. What's the significance of this?
You know, from our perspective, there's a couple of things going on here. One, working at Tesla is an intense experience by all reports, and so I'm sure there was some element of burnout that the departing CFO had here, having been there for 13 years. Also, promoting the chief accounting officer, keeps the cultural integrity intact of the financial organization, and someone that's been involved here with the company for 4 years, and so this feels like a potential natural evolution of the financial organization for a company that continues to see a certain amount of turnover just as folks work through their positions and then decide that it's time to move on after a certain period.
And
I don't think so. I mean, the company has not had an issue attracting talent. It's been one of the more successful companies here in the past decade, if not the most successful from a stock appreciation perspective. And so there has not been an issue on bringing new folks into the organization and bringing very talented folks, particularly on the engineering side. Within the financial organization, it's a little less transparent in terms of who's doing what and who are the key players. But by all intents and purposes, the company's done a very admirable job of developing an efficient, lean financial organization that's really served the mission of the organization.
News about Elon Musk possibly having to have surgery. He, I don't even know if we call this a tweet now, tweeted this, I suppose, for lack of a better word. I don't know if there's new lingo for the X platform. Is that a concern when you think about both this news with regard to the CFO and then just potential health issues for Elon Musk? Does that register as a concern for you?
There's principal risk for this organization with Elon, right? If he ends up having to step away or step down, I think there's certainly a lot of investors that really see him as the visionary that's pulled this whole organization together and continues to lead it. I have a hard time believing that he would step away even for illness for a very long period of time. It seems that he's been devoted to building these companies and really leading Tesla. And so as that situation evolves with his personal health, we'll have to reevaluate. But I have to imagine that he'll continue to be involved as much as he can. And there's also been, I think, a more robust infrastructure built out for the company in terms of senior management and a couple of layers of senior management. We certainly saw that on display at the analyst day in March in Texas. And so I think, they're mitigating that in a variety of ways as the organization grows. But it's hard for me to believe that Elon would step away for very long unless really forced to.
And Tesla has been a leader in taking the reins in price cuts. They've been first to market on a number of different models and kind of led the way, paved the way for other automakers. Is that round of price cuts, do you think, over now, or is that something that we're going to see maybe ramp up later in the year?
We've seen actually fairly strong sell-through on vehicles through the first part of the year, and part of that has been modulation on pricing. As we get into the back half of the year, and we look at where interest rates hopefully flatten out here in the short term, we'll see how vehicle sell-through continues on. For Tesla, they had been capturing a fairly substantial premium, and as they've ramped up a fair amount of volume on the production side, they've been taking share from a lot of folks, and sometimes you have to incentivize the market to adopt the products in a different way when you're taking share that aggressively. And so my sense is that we're getting close to the end of those price cuts short term. There's going to be an awful lot of activity around share gains and shifting in terms of which vehicle makers really do ultimately succeed. What we continue to see though from Tesla is that they've innovated on the technology and the cost side ahead of peers and continue to drive market share just by having structural cost advantages in terms of the vehicles and on the manufacturing front. And so they have the option to. I'm not sure we're going to see it here in the back half of the year, but they certainly have the option to drive share with those price cuts if needed.
And Colin, I know in your last research that you all put out in late July, one of the things that you were questioning was just Tesla's timeline for monetization of AI. What are you looking for from Tesla with regard to that now?
I mean, the first application on the AI is the full self-driving, and so they've been able to roll out a certain amount of functionality. What we really want to see is the actual use of the investments that they're making in terms of compute power into other areas, and it still seems premature to speculate on where that actually ends up. But the first one is on the full self-driving functionality, and they've done a reasonable job with that, but certainly are substantially later than they had anticipated in terms of being able to bring out fully autonomous vehicles. And so that's the first one that we'd look at, and then we'd be looking for an incremental monetization from the Jojo investment down the line, but it's hard to tell just yet where it's going to come from.
And we got
Kirkhorn's departure comes as Tesla readies the first delivery of its delayed Cybertruck. Now, the death of Tesla's executive bench and the company's succession plan has been issues of concern for investors, especially since Elon Musk's 2022 purchase of Twitter, aka X. Now let's get into the analysis. We're going to start with the monthly chart, and you can see this massive head and shoulder pattern. When the helicopter money was taken away, price went down 75%. Found buyers at a daily level of roughly 100. On the way up, it established another buy zone at 142. Now, I did have this target at 300. It hit it to the T. 300 is a round hole psychological number, but also that was the level where we had the shoulders form. The level that I'm watching is this massive monthly uptrend line, which served as resistance, support, and potentially it's going to be support again. Let's go down to the weekly chart, and you can see that Tesla just had a massive run up starting in May. This is the level that I'm looking at, though, the 230-ish level. Let's go to the daily chart. You can do trends in terms of boxes as well. You had one range, it broke out. Another range, it broke out. Now it broke out to the downside. And if I draw a new box, price broke out to the downside. So I'm looking at the level of 230. But word of caution, your momentum moving averages have shifted to the downside. Price is below the 50-day moving average. That's bearish. However, 230 is the level that I will be looking at to see if price can hold. If not, I also like this $200 level. That's the round hole psychological number of 200, which is also where the 200-day moving average meets as well. We're seeing a sell-off in the broader markets. The Nasdaq has been hit the hardest. August, September, October seems to be the most bearish months. So I wouldn't be surprised if price reaches the $230 level and makes its way to 200, as we had a massive uptrend in the first half of the year. But this is the level to watch. And then if this is breached, look at 200 as your next level, which is where I would load up the dump truck at for a longer term move on Tesla. Thanks for watching. Subscribe. Please like the video.